This is a quick video on how to invest your money for long-term safe and protected gains. If you're in crypto, you probably have some income, you have some coins, and you want to know what to do with your money. Like, do I keep it in stable coins? Do I buy Bitcoins? Do I buy altcoins, meme coins, DeFi coins? It's a real mess if you don't know what you're doing. So in this video, I'm going to show you some of the strategies that I personally think are best for you. But of course, this is not financial advice. I don't know nothing. I've lost thousands of dollars in crypto and I still lose money. So don't pay attention to me. Just watch this as entertainment and then you can make your own decisions. But this is not financial advice, to be clear. So with that out of the way, let me start bit by saying, let's say you have $100K in crypto. It comes down to your risk tolerance, how much you are comfortably willing to invest. Like, let's say you have a job that pays you $10,000 a month. You can probably invest 5,000, live from 5,000 and invest the rest. Some people may have 100K that they made over time. This is their life savings. They earn maybe 1,000 a month, or maybe they're unemployed. So a person like that will not be willing to take big risks. One of them is looking to make an income from the money. The other is looking to increase and grow it. So naturally, one will be willing to take more risks than the other, because if you want to make an income, you have to take risks, right? So let's say risky one. Man, this drawing is off, but whatever. Let's call it risky one. This is the person that has a higher risk tolerance, and let's say this one, a safe one. These are the two people that have this kind of money and they want to invest it, they want to multiply the money. But the risky one is willing to take more risks, higher risks. So this person, what I recommend for someone like that, in theory, this is just a simulation. This is just my ideas. I'm not a financial advisor. I don't know nothing about this. But if I were in that position, I would say, okay, if you want to make big money on this, I would say I've noticed a trend where every big chain like Binance Smart Chain, Solana, Base, all of them, they started off slow. They didn't have much movement, but then suddenly a project came up like PancakeSwap, Solana, Jupiter, Radium, and on Base, well, we still don't have a proper exchange, but they have meme coins like Bread. What I'm saying is every new chain is opening the door for new opportunities, for new investments, for new chances to make a lot of money quickly. So what I will do is simply pick the highest coin on that network, on each network, and invest on that. In this case, it will be Bread. On Solana, it may be Solana Chat or some, I'm really not familiar with Solana, but I will pick the top one, either the meme coin or a project that is fundamentally strong on some regard. A project that's been there that if you say Solana, you know this is the project you want to participate in. Personally, I'm not very familiar with Solana, so I cannot give you any recommendations. But Binance Smart Chain, that will be Cake, the PancakeSwap coin. But of course, there are many other coins. And for Ethereum, the Uniswap coin would be the recommended one. So you would take a 10% of your 100K and put it into each chain, pick the largest coin and leave it there, because those coins are safe. The benefit of these coins is that new people that come into the chain will begin with that coin naturally, because they don't know what else to buy. They are not going to buy a shitcoin that just launched in 2 days. So you want to invest in coins that represent the blockchain. That's what I'm saying. And that way you can benefit from continuous growth, either over time or either a few days. It depends. In a bullish market, you will see continuous growth. In this case, we're in a bullish market, so we're expecting coins to continue to grow for a few months. Then once you take 10% of that, why 10%? Well, because it's enough where you can feel it, where you can say, okay, I'm putting real money behind this. And it's enough where you can comfortably put it there without risking too much, because these coins are not going to be very stable. They are going to move around all over the place, but over a long time, they're going to probably stabilize and move to the upside, maybe, because new people come in to the blockchain and they buy the coin that represents that blockchain. So that's how you create growth over time. By the way, this is the 100K that you are willing to invest. This is not just all your money. This is the money you put into investments. So you probably have more. But yeah, this is the money that we want to invest into crypto. Then we take a 30% or so and put it into big coins like Ethereum, Bitcoin, Solana, Sol, BNB. These are the 4 main coins that represent each blockchain. These are the native coins of each blockchain. You want to put 30% into those coins. Why? Because they are much stable than other coins, and they are of course gonna be used by the people using the blockchain, so they have a natural growth path. 30% is significant, but it's good, because a coin like BTC, it's unlikely. Right now it's about 70k per BTC, and it's difficult that it drops to 35k, which is half of it in a few days intensively, but right now it's unlikely to see a big drop in a few days. It may take a few weeks or months, and the drop is just half of your investment. It's not like Solana, where you buy one coin at 100 and you sell it at 10, you lost 90% of your investment, so it's much more risky. But overall, I will put 30% to that. Then I will take 50% and put it into stable coins. That is Tether, USDC, and other coins. These are coins that will be there for whenever you see an opportunity. They are not just gonna sit there and collect money passively. They're gonna be used for entering new opportunities. When you see a new coin trending, a new narrative being formed, you want to use those coins over time. Let's say 1,000 here, 1,000 there, because you see that there's new trends forming and you want to participate into them and probably benefit from those. So these are the stable coins that will be sit there passively, but will be ready to activate whenever you see an opportunity. And the rest, 10%, is just straight up gamble. You just invest into new projects that may or may not do well. You maybe some Telegram calls group called coin, and you want to participate in that coin because it looks great, it's interesting. That 10% is what you use into those coins, where you quickly see either you win or you lose, because these coins are very new. They're being launched recently and they're being promoted all over the place. So it's a gamble, right? You don't know if they're going to do well or not. But the important thing is that the 50% that we kept in stable coins, that is going to be used after this 10% is gone, because, well, unless you make some wise decisions and you invest into good coins and you make this 100%, then of course you start to redistribute. Let's say you put 1,000 and you get 10,000 back, then you sell and you take that 10,000 and you redistribute it like this: 1,000 here, 3,000 here, 5,000 here, and you recover your 1,000 back. That way you can constantly reinvest and keep your profits growing, because that's how you maintain a position that is more stable than the original one. And yeah, the 50% that's gonna be used, if this is gone, you're gonna be using that money for something else. But meanwhile, while these stable coins are setting, you're gonna put them into places like Binance, Coinbase, Nexo, KuCoin, Kraken. These places allow you to leave your coins there and earn a 10% or 5% or whatever it is on your coins, on your stable coins. This is passive money that comes to you. Of course, you want to do the same with Ethereum or other native coins. You want to stake them as soon as you can, especially if you're going to keep them for a long time. If you're going to move your Ethereum in a week, you don't want to stake it, because the gas cost on staking it itself is expensive. Plus, I recommend you to wait until the gas costs are cheap, like 4 or 5 way, then you invest into coins. I mean, you stake those coins. So that's the risky strategy. Overall, it's not that risky, right? But this money that you put into stable coins is going to be used for new coins that you see here and there. After this one is gone, this 10% is the gamble one. Now, a safer strategy would be, again, 50%. And this one would be used for big coins like Bitcoin, Ethereum, and maybe Solana. It will be distributed as however you want, and it will be left there. You can stake those coins and you can do whatever. And you leave them for a long time until you see a 5 or 2 or 3x after a few months or so. And the rest, again, 50% on stable coins, where you stake them again and you take maybe 5% and you use it into random investments that seem interesting to you. You may want to follow a Twitter account, you want to see their performance and invest into their calls based on how they did in the past. You want to also participate in new narratives, new coins that are being launched, like we've seen with NFTs, simply came out of nowhere and then started growing and so on. So you want to use at least 5% into active investments. That will be the safest route. You take some big coins and then stable coins that you stake and let them make you money passively. This is your money after all. You can use it however you want, but that's what I recommend. If you don't want to risk it, or you simply want to have some passive income that's not gonna multiply your net worth by 10 or 20%, or 20x, you simply put it into large coins and stake the rest into stable coins that provides you a nice income. Now, of course, you want to distribute your investments into as many coins as possible, because we've all seen no coin is safe. We've all seen with Terra through USD, the coin, it went down. It was a stable coin. People thought that was great, but then it went down hard. So you don't want to keep it all into one coin. You want to take at least 5 major coins or 10 and distribute your investment evenly, or maybe some more than others. That's how you protect yourself against coins that simply blow up for whatever reason, and you stay relatively safe from market movements. Hope you like this video. Make sure to join my Telegram group. Share this video with your best crypto friend. Give it a like. Leave a comment below. Tell me what is your preferred investing strategy for your coins, whether you're a risky trader or a safe trader. Let me know in the comments. See you soon.